in self-storage, competition is generally not what you want. Like, you don't want to hear that somebody's opening up a place down the street from you. And that's what I was doing to him. And he was really smart about it. He reached out to me and was like, hey, what if we like partner on this thing? Like, we can kind of, co-own it, and I'll manage it for you since I already have all the machines in place to do that. And you can be a part owner and you don't have to be as actively involved. And I was like, yeah, that sounds perfect, actually. Maybe we should do that.
Seth, thank you for joining me for our Thought Leader Spotlight series. I'm your head of partnerships over here, Matt Camp at DealMachine. And on these, we really like to shine a spotlight on industry experts like yourself, hear what you're up to, how you see the world evolving, and how you got into real estate. So today, really excited to welcome on our friend Seth Williams. Seth is a real estate investor himself and the founder of R.E tipster.com. It's a real estate investing community that really teaches and self-motivated people how to make great money from real estate, while also minimizing risk and creating time for more things that matter. So love the mission, love what you're doing. You put out great content between that, the podcast, everything you've got going on. So welcome on, Seth.
Hey, thanks, Matt. Glad to be here.
Yeah. Can you maybe tell us a little bit more? I mean, I mentioned a little bit about your bio right there, but could you tell us a little bit more about your journey, how you got into real estate? I know you're an active investor yourself. Yeah. We have plenty of people watching this that are like, just new to real estate or thinking about getting into it. So that's always super helpful to hear how you went through that journey too.
Yeah, for sure. Yeah. So for me, it started probably in like, I don't know. I did my first deal in like 2006 when I bought my first house, but I didn't really start getting into like flipping properties until about 2008, 2009. And for me, I mean, my journey began similar to a lot of people, where I picked up Rich Dad, Poor Dad, and I read that and I was like, awesome. This is, mind blowing real estate. I guess I'm supposed to do that now. So let's go find some deals and buy some houses and do that. And I had no idea what I was doing. And I spent just hundreds and hundreds of hours trying to find deals on the MLS, and I couldn't do it. Like, I couldn't find deals to flip houses, to use as rental properties. Like, every time I would run the numbers, like, it just didn't work, like not even close. And, when I would finally put offers on properties, I would be way outbid by like 10 other people. I mean, kind of similar to this past, year or two, where it was just insane. This was back in like 2006, 2007, as, before the big crash. And it was just super frustrating because I knew this must be possible, right? Like, there are people out there making money from real estate, but I can't figure out how to do it. So how are they doing it? And it wasn't until I was doing a lot of research, spent a lot of time in different real estate investing forums at that time. This was sort of pre-Bigger Pockets, before they were a big thing. And I came across this idea of investing in land. And at first I was like, what? Land? Like, why would I do that? That makes no sense. Like, where's the cash flow? Where's the rental income? Like, who wants to buy land? That's just weird. But as I learned more and more about it, it was like, this actually makes a lot of sense, because not only is land a very simple type of property for the most part, it's not, perfectly simple, but a lot of the complexities of, houses and buildings don't exist with land, because there's nobody living there. There's nothing that can fall apart or get broken or stolen or destroyed. It's just dirt. It's a very simple type of property. But more importantly, it was about how you actually find really good deals on land, so that you can buy land at a small fraction of its actual market value. And that was the secret sauce, because if you can buy anything at a fraction of its actual value, you can make money on that thing, whether it's a car or jewelry or any tangible asset that other people want to buy. And it was really through a direct mail and through a very specific type of list. Like the delinquent tax list is what I call it, but it's essentially this list of people that are past due on their property taxes, but they still own their property. And you basically just want to contact them and make them a really low offer. And because they have this delinquent tax issue, a lot of times there's a reason for that. It's because they don't want the property, or maybe they inherited it, or maybe they can't afford it. And, don't get me wrong, a lot of people blow you off and don't want to do it, but all you need is a handful of people to say, yes, I'll sell my, $10,000 property for $2,000. Let's do it. and you can buy these things cash with no financing and own them free and clear for, 20, 30% of what they're actually worth. And, I was able to turn around and sell these things without a lot of hassle, without dealing with tenants and kicking people out and fixing things up. Like none of that was there. It was just a very simple type of transaction. Um, and as the years went on, I realized I don't actually need to see these things with my own eyes before I buy them. It's important that somebody sees them. Like I could find somebody in the local market to do it. I can get on
Mhm.
Google Earth and do my research that way. I can get a surveyor if I need them and they can do a survey. But like I don't physically need to be present there. And and that's another amazing thing about land is it's not like a house where like you need to unlock the thing and get in and see it and smell it and clean it up and all this stuff. Land just doesn't have that. It's a lot simpler. So anyway, fast forward 15 years, and land investing has kind of been the first and biggest thing that I ever found success with, and it's just been an amazing business. And in 2012, 2013, I started retipster.com, where I started it after seeing another blogger. His name is Pat Flynn, who runs
Mhm.
smartpassiveincome.com. Has nothing to do with real estate, but I just saw what he was doing with his website and his community. I was like, you know what? I wonder if I could do that kind of thing for real estate investing for the things that I know. I saw a lot of similarities between him and me in terms of his personality and just the things he was good at. It's like, I can totally see myself doing what he's doing. And so that's what RE Tipster became. And I've been basically just sharing what's been working for me for the past 10-ish years now. And yeah, it's just been awesome. So that's kind of I guess, my story about land. And in recent years, I've been breaking into the self storage world too. So I wouldn't say I'm like an expert at that, but I'm learning a lot as we're developing our first storage facility. And that's been a
Mhm.
fun, exciting, scary process too. So,
Absolutely. Yeah. And I mean, you put out great stuff on, RE Tipster. You've got a strong community there, like a lot of really good people who are, contributing knowledge there. And we definitely, it's an area that we have people ask us about all the time is land and how do I get into this? And is this a good idea? And just really kind of like, putting their toe in the water there.
yeah.
But can you maybe talk us through that in terms of like, hey, where should you start looking? How do you start analyzing it? Maybe give us a little bit of the playbook there of, if you're thinking about land as an option, where to go, where to start.
Yeah, for sure. Well, there's land deals everywhere. And usually, I mean, it's kind of changed in recent years, but even with the changes, I think in most cases, the easier part of the process is finding the deal because it's kind of a numbers game. If you pull the right levers and push the right buttons and send out the right messages into the world, like, you will find deals. Um, so it's fairly easy to control that. It's just a question of how much money you have to spend and what you have to do to make those systems do their job. But usually, where most people hit the bottleneck is in the selling process because, again, there's lots of different levers you can pull to make a property sell faster. But in the end, um, there's no like surefire button you can push to make, to force a property to sell. You're kind of waiting in a sense until the right buyer comes along. If you've got an amazing property, you don't have to wait long. But if you have a property that's kind of like, it's not like the most amazing thing in the world, you might have to wait longer for that. Um, so because of that, knowing about this bottleneck in the selling process, for a lot of reasons, it can make sense to pick a market where the selling process is going to be easier. There's more buyers actively looking to buy land in those areas. You don't have to work as hard or wait as long. Um, and again, there's different ways to assess this and figure out which markets are moving faster. Where do people want to buy land? One way to do it is by, getting on a website like Zillow or Redfin and just, going to the zip code or the county or the city or the general vicinity of where you're thinking about working and just seeing how many vacant land transactions have there been over the past 30 days, 90 days, 180 days. Like, are properties being bought and sold here, or are properties just being listed and sitting there forever and not selling? And even going further beyond that, you can, with Zillow, for example, you can click into an individual listing and see, how many days on the market has this thing been there? How many views has this listing gotten? Have people like saved this property? Like, is this something that people are actively doing stuff with it? or is it just being listed and nobody cares? So there's a lot of different clues you can look at, and there's even tools out there now where you can scrape a lot of this data and sort through it and very quickly figure out, looking at hundreds of thousands of different listings and figuring out, are these properties selling quickly or not? And are there many listings in the first place? Um, what a lot of people will do, and this is what I've always done, is you kind of find a big metropolitan area, preferably one that's growing where people are flocking to it, not away from it. And you kind of just go maybe 1 to 3 hours outside of that area. So not like in the heart of the city, but in the rural areas around it, and start there. Because usually that's far, it's far enough away that it's kind of like a home away from home for people who live in the city, but it's not so far away that they can't get to it.
Mhm.
So yeah, there
Yeah.
you go.
Do you see, so when you actually, I know you mentioned like, hey, it's tough to sell the property. Sometimes it can, depending upon the quality of that land. Do you think, you know, are you strictly recommending, hey, selling the property, and really flipping it that way? Or do you ever get into anything on the development side, or just curious there on like how far you go with that land?
Yeah.
And I know you're doing self-storage now, but just curious on what you
Yeah.
recommend especially for the newbie.
Yeah. Well, that's actually one example where I'm going the development route for the vacant land I buy.
Mhm.
It's actually a newer thing for me, and it's mainly because like you're right, there's all kinds of different avenues you can go. You could try to rezone a property. You could try to get the land entitlements, which basically means the local municipality will allow you to build a certain thing, but you didn't actually
Mhm.
build it. You're just getting their permission in writing, and then you're selling the property to somebody who actually wants to do that. And just doing that gives that future buyer certainty. It's less questions they have to answer, and that alone makes the property worth more to them. So it's kind of this intangible way of boosting the value of a vacant lot, if that makes sense. So I've done
Mhm.
some of that, and other people. I haven't done a whole lot of this, but you could also subdivide a property, and this is easier to do in some states and areas than others. Some states make this really easy. Some states don't make it easy at all. But if you did want to go that route, and if there's demand for those types of properties that you're creating,
Mhm.
absolutely, it can make a lot of sense. Um, so yeah, I mean, there's lots of different ways you can go, but whatever path you decide to go down, if you decide to go down those paths, it requires expertise to some extent. Like you have to learn a lot more about, okay, how do I subdivide? Or how do I sell this property with seller financing? Or how do I change the zoning or build this thing? And I wouldn't recommend trying to do all of that at once because each one of those paths requires a big commitment. And any commitment you make means you're saying no to a lot of other stuff in doing that. So um,
Mhm.
for a lot of years, I was just intent on not doing any of it because learning that stuff would require I can't do as many deals because I'm getting all lost in the weeds on all this. Um, but I don't know that there's really a right or wrong way. I think it's just understanding that you know, any path you choose has costs. And which costs are you willing to pay for going down that path?
Mhm. Yeah, it seems like your initial formula, like you said, was, hey, buy something that is worth more than you're purchasing for, and then
Yeah.
find a buyer who's actually going to run with it and find value in it.
Mhm.
Do you, if you do go that route, like for self storage, for example, what is that process of analyzing that? Like that's something I think a lot of people can get hung up on, can have a little bit of analysis paralysis of, okay, what do I do,
Yeah.
with this asset beyond here? Can you maybe talk us through that process, and then especially the self storage route, like how you landed on that, and why you're going that direction?
Yeah. Yeah. I can totally relate to that. I've gotten hung up on analysis paralysis on this storage thing. So there
Yeah.
are certain things that I mean, it's actually not that difficult to figure out in terms of the math and figuring out what is my unit mix going to be. So, for example, like how many units of what sizes will you have in this facility, and how much can you charge for each one of those units? And you can figure that out just by looking at the competition and figuring out what they're charging and how full they are. And you can certainly do all this work manually yourself, and that's what I did at first. But you can also order a feasibility study, and then I also did that. I paid $7,000 for, well, I'm sorry, $6,300 because I got a discount, but that's about how much it costs to do that. And there's different specialists out there who can get a lot of this data and run these reports and crunch the numbers for you just to confirm or deny, like, yes, there is enough demand to build a new facility and it'll fill up pretty quick. Or no, don't do this. It's already overbuilt in the area. So getting a feasibility study on self-storage is a pretty quick way to break that analysis paralysis, is just by
Mhm.
getting some objective answers from somebody. Um, but was that your original question? Am I answering that? Or
Yeah, that
was there
was a great
something like,
tip.
okay.
Yeah.
Yeah.
No, absolutely. And then you had that study, and then they said, hey, they assessed, hey, there's more demand here.
Yeah.
Is there anything along this journey you've learned so far that you would maybe do differently, or any kind of common mistakes that you see, or just curious on how it's going so far? Since I know
Yeah.
you like you said, you're not, you're learning too, but hey,
Yeah.
you're steps ahead of people who are listening to this, who are probably thinking about that space too.
Yeah. Yeah, well, self-storage is, and I didn't totally understand all of this when I started this process, but um, it's gone through a similar thing to every other type of real estate over the past couple of years with the pandemic, where values just shot way up, kind of artificially so. Like it's not real. Like it was just the demand went a lot higher, partially because lots of new software is coming out to make the management of it a lot easier, and also just pandemic related issues. People want more storage for some reason. I guess I don't even fully understand the connection, but because of that, a lot of eyes have been drawn to the storage industry, and lots of new facilities are being built right now. And as this is happening, demand is kind of starting to taper off and go down now as all these new places are coming online. Um, and so for me, when I got this feasibility study done, it was like, yes, green lights all the way around. Like, this is going to be awesome. Like, it's going to fill up really quick. You're going to make a ton of money. And I think that will still be true, but it's becoming less true now that reality is setting in and demand is kind of tapering off a bit. Um, if anything, it'll just take a little bit longer than anticipated to fill this thing up. Um, but something that was kind of a huge blessing, I think, that I wasn't even planning on when I started this. I was planning on building this and operating it myself, because managing a storage facility, it definitely takes some work, but it's not a crazy amount of work. Like, you can feasibly do that with, 5 hours a week, just doing what you have to do, because nobody's living on site. There's just not as many things you have to actively do. But even so, I've never managed a facility before. Like, I know how to do it in theory, but I don't know how to do it based on experience. And there's a
Mhm.
guy in the local market who already had a couple of facilities that he was running, and he found out about mine. And in self storage, competition is generally not what you want. Like, you don't want to hear that somebody's opening up a place down the street from you, and that's what I was doing to him. And he was really smart about it. He reached out to me and was like, "Hey, what if we like partner on this thing? Like, we can kind of co-own it, and I'll manage it for you, since I already have all the machines in place to do that. And you can be a part owner, and you don't have to be as actively involved." And I was like, yeah, that sounds perfect, actually. Maybe we should do that. And so we did. And so that's something I wasn't really planning on, but when it came to fruition, it's like, man, amazing. That's just what I needed. So if you
Nice.
can, and I think there's kind of a couple specialties in self storage. There's the development side, and then there's the management side, and they're not the same thing. Like, some people are great at one and not the other. So if you kind of know yourself, and if you know you don't want to do management, you might want to look at somebody nearby who you can either partner with, or I know you can get third party management companies, but they usually need to see a big enough facility to justify their involvement. Like, if you're just doing 10,000 square feet and that's it, then a lot of those might not be interested in working with you. So it has to be big enough. But yeah, really just finding ways to partner with people when you can. And yeah,
Love it. But what about on the land side? If you're not going to go that extra step of figuring out a different exit strategy, are there any common mistakes that you see there, or can you tell us maybe some of the lessons you learned, especially when you're first getting started there? That
yeah,
and again, R.E tipster, you share a lot of that there, but I'd love for you to share that with our community a little bit too, if that's okay.
yeah, yeah. So land is kind of a funny property type in a lot of ways, because value can be a very subjective thing. Like, there's a parcel of land in my backyard where I live here in Michigan. And if that property ever came up with for sale, I would pay a lot of money for that, because I really want that land. but to everybody else in the world, they don't care. So it's one of these situations where, like, to me, it's worth a lot, but to you, it's not worth hardly anything. And land is like that in a lot of scenarios, depending on what it can be used for and its location. So coming up with like a rock solid value for a piece of land can be very difficult in a lot of cases. It's different than a house where there's some pretty concrete numbers you can look at to come up with a
Mhm.
reasonable estimation of that property's value. So because land is difficult to value, a lot of banks don't want to deal with it unless you're planning to build a house right after you buy it. Like they don't want to just finance a rural, small, vacant residential lot. Um, and so because of that, uh, for the most part, if you want to buy one of those properties, you have to have cash, or that seller needs to finance it for you. But a bank probably is not going to get involved with that thing. Um, so that's one kind of quirk about land, is just trying to figure out, like, what is this thing worth? And if I can't really get a rock solid, 100% confident answer on that, how do I price my offer so that there's no way I can get hurt on this thing? So even if I end up being wrong about my guess, it's still okay. I'm still going to make money. And that's part of the strategy behind making such low offers, is because of that risk in the valuation process. It's one way to just mitigate that and create a buffer of protection. And then also, where a lot of people tend to get hurt on land, um, it kind of boils down to due diligence and doing your homework and understanding what you're buying before you buy the thing. Because land has some tricky things that can go unnoticed if you're not looking for them. Like, for example, like, say if you're building a house, or if that's what your goal or your future buyer's goal is, to build a dwelling there, and it doesn't have access to a sewer system. In that case, you need to have a septic system. And in order to have a septic system, the soil needs to pass a perk test. So that, the water needs to be able to drain fast enough through the soil. If that can't happen, then you can't put a septic tank there, which means you can't have a house there, which means the value just plummeted. It's one of these just weird things that, like, if you know to look for it, you can look for it and get the answers. But if you're not actively asking those questions, or if you're not willing to do that work, then there's some risk there. You could buy a property that's suddenly worth a lot less than you thought it was. So, um, stuff like that. And that's an issue, for example, that, like, if you're buying a house, you don't even have to think about that. That question has already been
Right.
answered. So, just being aware of those things can be an important thing.
For sure. Yeah, the due diligence piece is definitely more active on the from a land perspective. But the
Yeah.
one thing I know you mentioned this earlier, and I wanted to touch on this. Which again, really appreciate your time, man. This has been phenomenal. But
Yeah.
um, on the market side of what we're going through right now, you've kind of hinted at this a little bit, and you mentioned, hey, you went through the crash, 2008. How are you kind of treating the market that we're currently in? Are you pivoting anything? Are you changing anything? I'm just curious in terms of how you see things right now.
Yeah. I think something that most land investors are seeing right now is just on the selling side is just slowing down a lot. And part of it has to do with interest rates going up, which affects the building market, which also affects the land market. Um, so I think that's probably the biggest notable change that a lot of people have noticed. But honestly, for me, it's basically just getting back to normal. Like, I'm not surprised by this. This is par for the
Mhm.
course. I mean, when I got started in 2009, I mean, it was the worst of times, especially for land, and especially in the state where I was working, which was Michigan. So I've kind of seen it at its worst, and I know it still works in those scenarios. The key is just to make sure you're making low enough offers in the first place, because even if the value goes lower, it's all fine as long as you're making your offer lower, to match that. Um,
Right.
but really, just kind of expect a longer hold time when you're trying to sell a property, or plan on doing something to make that property a lot more attractive. Like, for example, maybe rezoning it, or maybe offering seller financing, or maybe having a lower asking price, or something to keep it moving. Because you didn't really have to do that a whole lot over the past couple of years, but it's getting back to an environment where you do have to. So,
Yeah. Do you think, and just because we get this question all the time, like, how would you answer if someone had said, hey, is now the right time to get into, fill in the blank, real estate, land, what have you? How do you kind of help people overcome that uncertainty?
yeah, I think if you have the right, acquisition strategy, and if you're going about it the right way and finding the right people and making the right offers. And if you go into it with the expectation of what you'll have to do on the selling side, then yeah, absolutely. I mean, kind of just stuff I've been talking about here, like just uh, expect these challenges here and there. And I think the challenging part about that question is that it is changing from year to year. Like the things that I could tell you 10 years ago aren't necessarily all true today. Some of them are, but some of them are different. So just, I think maybe just keeping that in mind whenever you hear somebody saying a overgeneralized statement about how something works, ask the question, okay, when was that statement made? Because maybe that's not true today. Or where is that person working? Or what are they doing different from what I'm trying to do? Because they may not be wrong. It's just not an apples to apples comparison. And yeah, and any business model I think is going to have these complexities to it. I mean, there's always going to be these what ifs and these wrinkles that you have to deal with. But I think if you go into it expecting not perfectly smooth sailing all the time, you'll probably be fine. So
For sure. And I mean, that's something too, like those broader generalizations about the market crashing and things, I mean, that's going to be variable based on where you are. And like you said, it's, it's always evolving. So that's a really good way to look at it, Seth. Appreciate
yeah,
that.
yeah,
Awesome. Well, really, really appreciate your time today. This has been fantastic.
yeah,
How can people connect with you? Is it just through RE Tipster, or what's the best way to follow and get involved with what you're doing?
yeah. retipster.com is kind of the home base. We've got a forum there. We're also all over social media. If you just go to whatever platform you spend the most time on and just look for RE Tipster, you should find us there. And we also have a pretty active Facebook community. Maybe that's another thing to check out.
Mhm.
But yeah, we'd love to see you on the site. And if you ever want to contact me personally, if you go to retipster.com and scroll to the bottom, there's a little contact button in the footer, and you can reach out to me that way too.
Perfect. Well, we'll make sure to link to that on our end. We've got some free resources on how to build your real estate business that we'll also link below as well. But Seth, really appreciate the conversation, man. Thanks again.
You bet. Thanks, Matt. See ya.
All right. To everyone watching, this is Matt Camp with Deal Machine, and happy deal finding.